What is going on, investors? Hopefully, guys are doing well out there. It was a gigantic week for earnings this week. We heard from Meta, we had Amazon, we had Apple, we had Microsoft, we had Google. We basically had everybody reporting their earnings. We'll talk about that on today's show. We are just days away from a presidential election here in the United States that is going to likely change at least the discussion of policy going forward. And we've just got a lot to talk to on the FAANG Stock Recap Show, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. We'll kick things off like we always do, and that is Meta Platform. Start of the week at 577, down about 1.8% when the company reported their earnings. Finished the week at about 567. Those earnings for Meta were spectacular. You had about 19% growth rate year over year. Their guidance was more than good enough, but the stock was extended from a technical perspective. Also, the valuation, certainly when you compare it to a Google, which has almost an identical business model to this company, trading right in kind of that mid-20s valuation, and just for whatever reason, that is the multiple that the market is placing on kind of the online advertising business. When we look at this company from a high level perspective, really those operating margins were spectacular. 43% operating margins over the past year. It was just 40% last year. One thing that I looked at here as well, which kind of surprised me, was their headcount was actually up 9% year over year. So they expanded their operating margins, and operating margin obviously includes employee salaries. So they expanded their headcount by about 9%, but they were able to expand their operating margins. So they're doing some cost cutting. We've seen they cut back on snacks and those types of things over at Meta, and maybe that helped expand margins. But things are really good. Some discussions that we'll probably have in the coming weeks when we get maybe a clearer picture on who the president is and if they have full control or half control of the House of Representatives or no control. Well, it'll be kind of the effective tax rate, because there will be some discussions here. Meta paying 12% in the most recent quarter, and we'll see if that has the potential to maybe go up or maybe even go lower. Now, the company is working on its own search engine to reduce reliance on competitors, also probably bring in some new advertising sources as well. I think what these companies have decided, because we'll run an OpenAI story here when we get to Microsoft, where they're basically launched their own search engine inside of OpenAI. And so what we are finding is these companies, I think, found that they were able to scrape the world's data off of the internet for large language models. And now they realized, oh, well, we could turn this into a search engine too, and that's what they're doing. We'll talk about the competition when we get to Google, but we move on to Apple. Start of the week at 233, also moving lower at the iPhone maker, down about 4.5% to finish the week at, we'll call that $223 per share. iPhone, or Apple's earnings, were good enough, okay? The expectations weren't relatively high, but also Apple's not really coming over and above expectations. Revenue growth of just 6%, but when your revenue is $95 billion, 6% growth year over year is still rather impressive. Now, the company's iPhone sales will be under the microscope as we move into Q4. Certainly when the company reports their earnings, probably at the end of January, maybe early February. That'll be what everybody is going to pay attention to. And really over the next couple of months for Apple, that is what the stock is going to kind of move in one direction or another. It'll be, can they have a Q1, which is the fiscal Q1 for Apple, but it's really the calendar Q4. It's the holiday shopping season. Can they put up an iPhone number that is as good or better than last year? You see graphically, it's always the best time of year. Now, the company is filing to offer some new debt securities. The company has a mountain of debt, but with the amount of revenue and operating cash flow, they are going to use this for operational purposes and probably continuing to buy back the stock. The company unveiled some new MacBook Pros featuring the new M4 chip, which is, look, if you don't have a Macintosh computer and you haven't experienced it, well, these are absolutely fantastic. The new Mac Mini also has that new M4 chip. All of this has Apple Intelligence kind of integrated. I did also see the Mac Mini also was the first, quote, carbon neutral, I think, Macintosh in the lineup. but at a price tag, which I think is well over $600, that is well above the marketplace for these kind of desktop PCs, which are kind of mini, which you would need to attach some kind of monitor to. You also got a new iMac, which is the computer basically inside of a monitor that also gets the M4 chip treatment. Now, the company exported, this could become a critical story for Apple over the next couple of months, depending on who wins the election just a couple of days from now. Well, they are going to export about 6 billion of India-made, that's not units, that is dollars worth of India-made iPhones. I tell you what, if you get tariffs slapped on goods coming out of China and they happen to be the iPhone, well, being able to make those bad boys in India might become a big deal for Apple. We'll see what happens there. Now, they are going to acquire a photo editing app called Pixelmator. It currently retails for, I think, about $9.99 on the iOS operating system. Typically, what happens is when Apple buys an app that is in the App Store, first of all, they have a great visibility into the business, not only from kind of a revenue and a download and kind of a usage time perspective, but also from just what the app does against kind of the competition of camera apps out there as well. Typically what Apple will do is they'll eventually shutter the app that this company operates under, and they'll roll the features into the native software on the phone. Now, moving over to Amazon, big week for Amazon. So the week at 189, up big, up over 4%. And again, 4% is not that big of a deal, but we're talking about $2 trillion companies. 4% obviously is a lot. Amazon finished the week close to $198 per share. The revenue was great, up 11% year over year to over $158 billion. The company also gave us fourth quarter guidance, which was more or less meeting expectations, which is pretty impressive. But probably the most impressive thing that we've seen with Amazon over the past year. And really it brings into questions, how much more room does the company have expanding its operating income? Also, you could come all the way down to net income if you want to as well, but we'll focus here on operating income over the past year, at least on a 9-month basis for Amazon, has more than doubled. Look at this, $23.6 billion of operating income last year, all the way up to $47 billion. No, they didn't double their revenue year over year, but they were able to double their operating income. Now, interestingly, on the conference call, they did notice that they were going to have more synergies and more cost effectiveness inside of their fulfillment center. Andy Jassy sounding very bullish that they're going to maybe not double their net income over the next year. I tell you what, if they do that, Amazon is absolutely a stock you could buy, but they are going to continue to increase that. Amazon is running an incredibly good business right now. Now, Andy Jassy also on the conference call broke this quote out because it's very key to the semiconductor industry. And he says they expect to spend about $75 billion in 2024. This is on CapEx. I suspect we'll spend more than that in 2025. So basically saying that, yes, we spent $75 billion this year building out data centers primarily, but also some fulfillment centers, but it's primarily data centers. They're going to spend more next year. We heard the same thing from Google. We heard the same thing from Microsoft. And he says a majority of it is for AWS, and specifically the increased bumps here are really driven by generative AI. We obviously talk a lot about semiconductors. We talk a lot about AI, but there is kind of this gap between what the spending on AI is and the maybe potential profitability. But Andy Jassy clarifying in here. He says, as I was mentioning in our own opening comments, our AI business is already a multi-billion-dollar business that is growing triple digits. So he actually gives you an idea that the AI business is actually already a multi-billion-dollar business, and it's growing at a triple-digit percentage year over year, and is actually growing 3 times faster at this stage than the evolution of AWS. And Andy Jassy would be familiar with AWS since I think he was the architect behind it in the early days. So this is incredibly bullish, not only for Amazon, it's bullish for the semiconductor industry. It's really bullish for any of these mega cap companies that are investing in this AI, because they're not only spending money on it, but they're seeing the payoff, which is obviously really important. Moving on to Netflix, start of the week at $7.54. The stock basically went nowhere, finished the week at $7.56. Not a lot of news out of Netflix, but we'll continue to monitor Netflix and the streaming business. This is a segment of the market that has been obviously under pressure from a valuation perspective. Basically, everybody other than Netflix has kind of fallen on their face from a valuation and a stock performance perspective. But I think there's going to be opportunities coming relatively soon in the space. And so obviously that's something that we've got to talk about. Now, moving over to Nvidia. Not a good week for Nvidia. Started the week at 142, down about 4.65% to finish the week at 135. But company just got tons of bullish news in the headlines. So you got to read through these headlines when it comes to Nvidia. Microsoft is going to spend almost $10 billion renting AI servers from CoreWeave. When Microsoft reported their earnings, one of the things that they've said on the last, God, I can't even remember, but at least the last 4 or 5 conference calls, is that they have more demand for their cloud services as it relates to AI than they're able to fulfill. So they actually could, if they had capacity, they could actually sell more and have higher revenues in that business model. One way to shore that up is to go to CoreWeave. CoreWeave, as you might know, has an investment from Nvidia, and Nvidia has been giving priority shipments to CoreWeave for those obviously high performance GPUs. And so Microsoft coming in and renting those for $10 billion. CoreWeave plans to go public, I believe, sometime next year. This $10 billion from Microsoft and an investment from Nvidia probably spurring that even forward. Obviously, all of this is bullish for Nvidia. Now, we got news from Intel this week, and by and large, I agree with this headline that the results were definitely better than feared, at least on the revenue side, and certainly the guidance was very good, but Wall Street says that the company is not out of the woods yet, and I would totally agree with that. We talked about on our Intel video that the fact that their gross margins basically shrunk from 40% to about 15% year over year. Now, that explains when AMD reported their earnings, the guidance wasn't very good. In fact, it was like barely at expectations. And so AMD shares got slammed this week. In fact, they were at about $160 per share. And they ended the week at about $141. They are in an absolute battle, at least from a margin perspective, on certain product lines with Intel, and I don't expect that to cool off anytime soon. But what I would say is Intel is playing a very, very dangerous game, slashing their margins, because they really can't afford it from an operating perspective. I think AMD, they might have some rough patches ahead. Intel could potentially be falling on its own sword. Now, OpenAI is going to partner with Broadcom to build its own AI chips, very similar to a deal that is rumored with Google as well. Broadcom being an expert in making custom silicon. Now, this is somewhat less bullish for Nvidia, but understand that you still have to manufacture these chips. And one of the advantages that flies under the radar for Nvidia is they have basically pre-bought a large amount of capacity over at TSM. So TSM, obviously, or Taiwan Semiconductor Manufacturer, they obviously, as most of you know, they manufacture all of the semiconductors, at least on the high end, the data center semiconductors, and they make basically all of the semiconductors that are going in Apple iPhones and those types of any high-end device, and certainly any high-end server. TSM is making that, okay? It's one of the only manufacturing facilities in the world that can make it, and I would argue that it's the only manufacturer that can do it at scale, large manufacturing. Well, what Nvidia does is they call their buddies up and they basically guarantee payments in order to make sure that Taiwan Semiconductor can meet Nvidia's demand. And Nvidia basically ties up Taiwan Semiconductor from being able to make enough semiconductors for other clients, because TSM only has so much manufacturing space and only so many chips that they can actually manufacture. And so Nvidia does a very nice job with their ties with Jensen Huang, being in the industry for such a long time, that he basically goes in there and ties up that capacity. So when you see these reports that, oh yeah, custom silicon is coming, well, it will come, and it's something that OpenAI will absolutely do, but it's actually a little bit more difficult to pull off, only because there's only so much capacity out there from a manufacturing perspective. Now, we won't get into Supermicro a ton on today's show. As most of you'll know, back in April, I called this stock $150 trash. I think at the time it was over $700 per share. Now, that is all split adjusted. At the time, it was $70, and I called it $15 trash. Here we are several months later, and we're closer to $26. The company saw its auditor basically resign this week, and so we'll be talking about this on this semiconductor show. Links down in the description below to our Equity Empire channel. Be sure to go over there and check that out. We'll do a full recap and a full diagnosis of super microcomputer. Moving on to Google, started the week at not $125. That's what it started the year at. We're a little unorganized today, but we started the week at about $168 per share on Google, and they had fantastic earnings, up about 2.3%, finished week at 172. You're currently trading about 21 times forward on Google, which is probably the cheapest stock out of the bunch here. Now, Google reported those earnings, about 15% growth, obviously lags a little bit behind Meta, but obviously the revenue is higher at about $88.3 billion. They beat expectations, everything looking really good over at Google. Now, what's also interesting, the company has this Waymo self-driving, and a lot of news out of Waymo this week as they're hitting 150,000 paid autonomous trips per week. I think what we'll do is I posted earlier this week on the Equity Empire channel. Again, links down in the description below for that. Earlier this week, or maybe it was last week, I can't remember, I posted a valuation kind of estimate for Tesla. Now, one thing I didn't do, and it was on purpose, is we didn't really value the autonomous business that they're potentially launching next year. The company says that they're going to do that, although Tesla says that they're going to do a lot of things, but they often achieve those things, but usually not in the timelines that they do. So we'll kind of wait on that for Tesla. But I think we have some information on how the market, at least the private equity market, values these businesses, because Waymo has 150,000 paid autonomous trips per week, and the company is going to draw a $45 billion valuation in its latest round of funding. So we're getting a little bit of window into what valuation you could potentially put on Tesla's business if they're able to achieve similar type of product and usage as Waymo. Also, remember that Waymo, I think, is only operating in maybe 3 or 4 metro areas. Certainly San Francisco. I've actually ridden in one down in Los Angeles as well, certain parts of Southern California. I believe Austin, Texas as well, and maybe Miami. I don't know, but I believe those 3 markets have Waymo. So you're getting 150,000 paid trips per week, and you're not even in the metro areas of Chicago or London or New York City. Obviously, regulatory and maybe unions and cabs and stuff plays into some of that, but we're getting a little bit of window into what you can value these businesses, and that could potentially be bullish for Tesla and certainly Google down the road. Now, the 4th most populous country banned sales of Google smartphones. These are going to be banned in the country of the great country of Indonesia. That is because the company wants devices sold in Indonesia to contain at least 40% of locally manufactured parts. So similar to export controls or maybe even like a tariff here, other countries do these types of things, and we'll see if Google is able to work around that. But my guess is Indonesia, even though it's the 4th most populous country, probably not from a revenue perspective. Now, moving over to Microsoft, started the week at 429, a little slippage in Microsoft. You want to see this technically, there could be some buying opportunities, down about 4.6% to finish the week at $410 per share. Company announced their Q1 earnings earlier this week, coming in at about $65.6 billion. That was just really impressive. 16% growth over at Microsoft. We're currently trading at a pretty rich 31 times forward on this one. Some of that has to do with the company's leadership in AI, but also their investment in OpenAI as well. Also, the company, like I said during the Nvidia segment, consistently gets on its conference calls and says our demand for our AI data centers basically outstrips supply. So the company is going to lease about $10 billion renting AI servers from CoreWeave. Now, OpenAI is going to bring search to ChatGPT, heating up a rivalry with Google. And so the search wars are on. We'll see, though, who ends up using the search engines and how profitable they are. I'm going to make a broad statement here, but I think part of it is true. If you look at the segments and kind of the different generations that exist here, at least in the United States, you have kind of the baby boomers. I don't see baby boomers using OpenAI's search engine. They are going to continue to search on Google. Most baby boomers are probably not going to have ad blocker. Most baby boomers actually click on a lot of ads. I know this because I've had websites that I've operated over the past 15 years. The websites that I have that cater to, quote, older people have a high profitability, whereas you have websites that cater to younger people. They tend to not click on ads as much. There's not as much product that wants to advertise to them. They have less money in their pocket, and they tend to have ad blocker installed. OpenAI is basically going to be targeting a search engine to a younger generation. Obviously, it's going to take some search queries away from Google. Also, what we know about Google's search engine is they actually run ads against very little of the searches. And if they continue to expand that, well, that'll make up for some search volume that might go out the door. But we have to keep an eye on this going forward. Obviously, we've got kind of the DOJ recommendations coming for Google based on maybe a breakup. But I think Google's hand and Google's case that it's not a monopoly actually is going to get stronger over the next year as these companies like Meta and OpenAI kind of infringe on their business, if that's the proper term there. Now, moving over to Tesla, it was a terrible week for Tesla. Start of the week at 267, down like 7%. That was sneaky, down to about $248 per share. Now, we should get delivery numbers, though, from Tesla. They usually report them at the first of the month. And so we should get those over the weekend, maybe Monday at the latest. Electric vehicle sales, though, are forecast to reach 9% in the U.S. Obviously, this also pertains to the United States election. Believe that former President Trump has vowed to end the EV mandate, which basically mandates automobile makers to make a certain percentage of the EVs. I actually think that could potentially be bullish for Tesla because I don't have the story up in front of me, but Ford announced that they were basically going to stop manufacturing, at least temporarily, their Ford Lightning pickup. That is because nobody is buying it. So they have more inventory than they have demand, so they don't need to make any more units. And so I think what we'll see is that many of these automobile makers will continue to make their light and heavy pickup trucks, which are a huge profit center. And if they don't have to make as many EVs, that they actually won't. And that'll actually tamp down demand just a little, or tap down competition a little bit that is coming from these other automobile makers, and give Tesla even more opportunity to capture more and more market share. Now, Elon Musk from the political end says that he is maybe going to potentially work with former President Trump if he is elected, and that $2 trillion budget cuts would severely hit the economy in the short term. I don't think anybody would argue with this. Here's the deal. As I get comments on my videos and I hear comments out there from people saying, well, Trump's tariffs would be terrible. Elon Musk slashing the budget government would be terrible. On the other end, with Vice President Harris raising the corporate tax rate, would basically be putting a tariff on every other company and certainly would impact inflation. Taxing unrealized gains would be basically maybe one of the most hurtful things that you could possibly do in the investment strategy. But here's the deal. We live in a country that is $35 trillion in debt. So when we start talking about tariffs and taxes and those types of things, you have to make the argument under that context that the country spends way more than it brings in, and that maybe one of these candidates, hopefully, will address it at least in a small degree. Now, rise of the machines. Elon Musk thinks that humanoid robots will outnumber workers by 2040. We'll see if he's right here. I think he actually has the potential to be right. Maybe, again, Elon Musk, I think, will be right on this. Will it happen by 2040? I don't know, but there is obviously a lot of development that is going to happen with these humanoid robots. And with Tesla, if they are able to meet and solve this market, well, an $802 billion valuation on this one is going to look very, 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 very small. Now, not small was the pullback that we saw in the S&P 500, but it is nothing to be concerned about, at least in the shorter term. And I would assume that you probably have some election kind of into the weekend selling. People are more or less going to play hands off until you get clarity on what's going to happen from a fiscal standpoint here in the United States. You've pulled from all-time highs. You get deeper pullbacks in the S&P 500. You've got opportunities to buy this one. You'd like for the pullback to be rather steep, anywhere back into the 5,300s would be a really, really good thing. Now, Meta has pulled back to an area of support right here at 564. If you're dying to get into Meta, this would I guess, be the first area that you would do it. Deeper pullbacks with Meta should be far more aggressively bought. We'll see if they get that opportunity in the weeks ahead. Pullback in Apple. We weren't really able to connect and create a new higher high here. I don't think it's really that big of a deal because this trend still looks really good. This is still the dominant trend. Pullbacks in Apple with support down here at 217. Even more attractive would be down here south of about $210 per share. Amazon kind of moved into an area of resistance up here at about $200 per share. Found some resistance there. It's probably waiting until after the election. Tariffs and corporate tax rates, both of those things, trade policy, all those things impact Amazon maybe slightly more than some companies. And so you'd like to see some clarity there with Amazon. Pullbacks, particularly ones that are related to tariffs, should be bought. We'll talk about that more if that materializes. Netflix just looking beautiful, just sitting up at the top, just hanging out, basically at all-time highs. Nothing really new to report there. Nvidia has confirmed a new higher high. It's pulling back. If you really, really love Nvidia and you just want to continue to ride up the train, well, you can buy it actually at these levels, probably just underneath $130 per share. Keep in mind with Nvidia, you've got earnings about 20 days from now, on Wednesday, November 20th. So just keep that in mind. I would probably wait until after that date. Google looks absolutely spectacular. Unfortunately, it had this massive move, I think after probably earnings, maybe a dividend announcement, buyback, those types of things. So to make a new higher high, you actually got to get pretty high on this one, up into the 190s, nearly $200 per share. Still a long ways to go. If you think that's going to happen, you still got $20 in upside. You probably should buy this one on Monday or Tuesday. Pullbacks in Google, though, particularly anywhere south of 150, are very, very, very attractive. Microsoft sitting on a level where you can actually buy this one if you want to. Now, we got the elections next week. We have cleared earnings on Microsoft. So, this type of trade setup, we talked about it when we did the Microsoft segment. You can buy Microsoft at this level. I would have a stop loss pretty close underneath. And this is a trade setup, okay? Long-term investors in Microsoft can actually add a small position at these levels. Further pullbacks in Microsoft should be bought a little bit more aggressively than the area here. But there is a trade setup here. If this level holds, and I'm not convinced that it will, but if it does hold, you should find some support here with Microsoft. It should move higher. So you've got $40, $50, $60, $70, $80 in upside potentially with this one. And you could set this one up where you're just risking like $8 to the downside. So you got a big risk reward setup with that one. And Tesla. So we had a pullback this week, but it's nothing to be overly concerned about. Probably because, or not probably, but because I would say that is good enough, close enough to a higher high on this one. And so you're just retreating back to this purple channel line, pullbacks to the purple channel line. If you want back into like the 230s, mid 230s on Tesla, you can actually buy that one with the idea that it finds support there, moves to a new higher high. Similar to Microsoft though, I would have a stop loss underneath this one. Thing about Tesla is obviously Elon Musk has hitched his wagon to the former president. And so if the former president is elected, I think you could have a move in Tesla that could move this one significantly higher. If the former president doesn't prevail next week, well, you can imagine that the Vice President Harris administration might look at him as an adversary, and that could negatively impact Tesla. So this one could have the most election risk. We'll obviously be back next week, maybe with a result. Who knows if they're going to count all the votes by then. But if they do, we'll obviously discuss that quite a bit and more. Guys, hopefully you all have a fun and safe weekend. We're obviously moving into a time where we don't know what's going to happen. There's always different types of uncertainty. And now I'm not saying this is some kind of crazy prepper or some kind of crazy guy or that I'm anticipating these types of things that are going forward. But this is the time, this is the weekend where if you're going to do some advanced planning, like maybe have a little extra water in the house, maybe have a generator or a battery backup or something like that. Maybe have some extra food in the house. If the Second Amendment is your thing, maybe have all that ready to go. Because when you move into these uncertain times, and we've probably had one of the most intense political standoffs over the past couple of months. Think about it. We've had a former president and a candidate for president attempted assassination twice. Last time that candidate lost, there was actually a riot in the capital of the United States. Not hoping and not anticipating either of those things happen this time around, but it's always good to maybe be prepared. So be prepared for this weekend. Let's hope for a fun, safe weekend. Let's hope for a fun, fair, and exciting election next week. And I'll certainly be here to cover it. We'll also cover Super Microcomputer if they report their earnings next week. Hopefully, guys, enjoyed today's video. Be back again soon. Good luck with your investments.